Good afternoon from Germany, and welcome to our very special webinar on how CBDCs could change the future of payments. My name is Roman Avdiev, and I'm the head and founder of the Franklin School Blockchain Student Initiative, where we pursue the goal of educating students and alumni about blockchain and DLT-related innovations. In this sense, we joined forces with the Institute for the Future at the University of Nicosia and decided to co-host a webinar on CBDCs. At this point, many thanks again on behalf of the FS Blockchain Initiative for your commitment. On that note, I will be your host and moderator for today. Without further ado, please allow me to introduce the guests we have joining us this afternoon. And before we get started, unfortunately, Professor Sandner was unable to attend due to circumstances beyond his control. He apologizes for the inconvenience. However, instead of Professor Sandner, we have Jonas Groß on board today. He's a research assistant at the University of Bayreuth and a project manager at the Frankfurt School Blockchain Center. And yeah, I'm sure, Jonas, you will be a great addition to this panel, especially since you have also recently spoken at several online events on this very topic. And last but not least, even at the US Department of Treasury. We also have Lambis Dianosopoulos on board today from the EFF, Institute for Future of University of Nicosia. He is also a researcher at the European Blockchain Observatory and Forum. But I will be turning it over to you, allowing you to introduce yourselves. Then I will have a couple of questions for our panelists, and afterwards we will open the last 15 or 20 minutes or so to AMA from the audience. So please make sure you hit us with as many questions as you can possibly muster, and I will do my best to get them answered for you from our panelists before the end of the hour. All right, so maybe we'll go clockwise. Jonas, you are to my right, so maybe you start first.
Perfect. Yeah, so thank you very much for having me. I'm really thrilled to be here today for this webinar. I think you did a very great job with the introduction, so I don't want to waste too much time telling about myself. Maybe one point to add is that I'm working for the Blockchain Center, as you said, and I'm currently also a PhD student here at the University of Bayreuth in Germany, where I basically now study CBDCs for 2.5 years. So I'm also addressing this topic from a practical perspective at my work at the Blockchain Center, but also more from an economic, monetary theory-driven aspect, academic focus from my dissertation, basically.
Yeah, that's absolutely great. Lambis, maybe you can continue.
Sure, yeah. As mentioned, my name is Lambis Dianosopoulos. I work as a researcher for the Institute for the Future at the University of Nicosia, which is a multidisciplinary center that focuses on blockchain and digital assets. I also work for the European Blockchain Observatory and Forum, and I'm a postgraduate student at the MSc in Blockchain and Digital Currencies, offered by the University of Nicosia, which I'm very proud to say is the first and the leading academic program on cryptocurrencies globally. I want to thank you for this invitation to participate in the event, and I'm very much looking forward to a great discussion.
Yeah, perfect. It's absolutely great to see the academic world adapting to new technologies, especially considering that blockchain and DLT is still a growing topic. Also great to see such involvement of academic research in the industry. All right, so I think it would be best to start this discussion with a very fundamental question, namely what CBDCs are, like a digital euro, for example, and how do they differ from bank deposits or currencies that we can already use digitally through online banking or PayPal, for example. And also, of course, why do we need them? Maybe
should I start? Okay,
sure,
perfect.
Absolutely.
And you can of course add or interrupt me, Lambis. So yeah, if we talk about central bank digital currencies, I think the term is actually quite good for a definition. So it basically is just a digital currency issued by a central bank. So I think that's actually it. So it's kind of there's the cash, we know it today, but in a digital form. And this is also the key difference, as you said, to bank money, because bank money is basically, from the holders of the perspective, a claim against the bank, against the commercial bank, so a private sector institution. And if you now hold a CBDC, then basically this is a claim on the central bank. And I think for most people, this would be kind of the same because it's all the euro and it doesn't have an exchange rate. But from a risk perspective, in times of crisis, it can be different, because if you hold a claim on the central bank, this basically has way more risk, because bank in theory can become bankrupt. Also something we have seen in the US during the financial crisis, maybe not in Europe, but in the US. So there is a higher risk, and therefore CBDC are, from my perspective, in times of crisis, or can be a big game changer, because you can basically deposit money digitally with your central bank without any counterparty risk as you have with commercial banks.
Yeah, and turning the discussion to a digital euro more specifically, a common misconception is that blockchains and cryptocurrencies will play a huge role in that. But this is not necessarily the case. Europe, over the 20-year history of its financial services, has a history of trying to make payments efficient and meet the needs of the consumers. It all started back in the 90s with Target, which was an effort to connect the independent payment systems that were deployed in its country. For example, Germany had the RTGS Plus and Greece had Hermes. So we had Target 1 in an attempt to connect those and make payments efficient. Then we had Target 2 in 2005 or towards the middle of 2000s. And finally, in 2018, we have TIPS. And what the digital euro is, and what we know for sure for a digital euro, is that it is a next evolution in this department. It is a next evolution in payments. And of course, with each new iteration comes the promise of more efficient payments, less costs, and more interconnection within Europe. And of course, as we mentioned, a digital euro has different value propositions for the central bank, for commercial banks, and of course, for people as well.
And this is actually, if I may add one sentence, Lambert, an excellent point. So the digital euro, it has nothing to do with blockchain. So maybe not nothing, but the technology is not a prerequisite for being a CBDC. So a CBDC can be issued centrally, can, for example, be used to similar to TIPS today, but accessible for everybody. It also can be based on a DLT, but it doesn't have to be. And I think this is quite different, because difficult and also very relevant to understand, because this is very, very often missed in the public debate. So first, central banks have decided to use DLT, and there are definitely reasons for that, but it doesn't have to be DLT.
Yeah. One last point would be that in order to highlight the difference, you really have to look into what is different when you pay with a CBDC or internet digital euro versus when you pay through PayPal or some online banking solution and scheme.
Yeah, that definitely sounds like a great venture for the coming years. Now that we've grasped the basic idea behind CBDCs, how would you portray a world with this in place? Can you maybe illustrate some notable use cases or examples that would constitute to our big change in our daily lives?
Jonas, you can start again.
Yeah, if you don't mind, just interrupt
me. It went great around the first time, so you can start again.
Okay, yeah, then it's my pleasure. So I personally, honestly, I just see one really use case for a CBDC, and this is being a digital form of cash. So it basically will be a form of central bank money available. So a new payment method you can actually use for payments everywhere. So similar to cash today. But this is basically my main use case for a CBDC. If it's not based on a blockchain, if it is, then this opens completely new business models. I think we can talk about this later on. But from a pure CBDC perspective, as a digital form of central bank money, I think it's quite boring. Maybe I find it exciting, but it's just the use case basically that you have a new means of payment. And maybe also a way where you can store your money more easily as compared to cash, right? So this can be robbed. It also can, if your house burns, your cash is basically gone. So this can be a reason why it's also easier to use the cash as a store, the digital cash or the CBDC as a store of value. So maybe Lambert, you have a more visionary view on that.
I do actually, but I would like to have to make one comment on the importance of having central bank money that is guaranteed by the protection under the aegis of the central bank. If you are a Cypriot or a Greek, which I know we have a lot of in our audience, you have you have experienced what it is like to be deprived of the central bank protection and guarantees. You went through bank runs and capital controls. You went through haircuts in Cyprus, and it is important. And those are the kinds of fundamental issues with the economy that we are trying to fix with a digital euro. Of course, the term digital euro is not that correct, but with a CBDC, making our economies more robust and providing new and novel options for the central bank in the form of monetary policy tools to be more effective at their job. Can I speak to some of the concepts that I see that are very popular for a CBDC? Those have to do with programmable applications of money, and this was also something that Jonas referred to when we start involving blockchain and smart contracts. So, is it okay if I do it now? Okay.
Yeah. Nice.
So we've seen with advancements from the private and open blockchain sector how we can use technology such as blockchain and consensus mechanism to allow us to clear and settle transactions very fast, very efficiently, and irreversibly without the need for many intermediators. If we use some of the main technologies in a digital euro, this means that transactions that now take days and are costly to process can happen in a matter of seconds. And this is, of course, very accurately reflected in the notion that we will be able to send money as easily as we can send a message. And why it is important to be able to send money as easily as you can send a message. And here is where we enter a new era in payments. And instead of having to do a subscription or paying a fixed fee, given a digital euro that is efficient enough, we will be able to instead stream payments that correspond exactly to the use that we make of a service. Now, consider, for example, a Netflix, where instead of paying a subscription or a fixed fee, you pay down to the second of watch time consumed, or an Uber application where you pay by the meter. This ability to stream payments is one of the examples of how efficiency in a digital euro can fundamentally break some existing business models and create entirely new ones. I would like to take 1 second, and I will be brief in my next response to make up for it, to talk about the concept of autonomous agents. We know that blockchains and similar systems don't care about who you are. They are agnostic to this information. And this has given birth to a famous quote which says, on the blockchain, nobody knows you are a fridge. So if we can make a digital euro through the use of blockchain or some other system agnostic to who you are, okay, what we can do is open it up to machines. And what this will enable is the convergence of Internet of Things and money into a new form of economy that we call machine-to-machine economy. And this is where my self-driving car drives me to work and then charges itself, paying the autonomous section, and then Ubers around making passive cash for me. So yeah, those are two things, the streaming of payments and the machine-to-machine economy that excite me as prospects of a digital euro that go beyond, yeah. Sorry.
I think this is definitely way more visionary than my boring digital cash I just explained in the beginning. Yes, so thanks, Lambert. I personally fully agree. So if we use a blockchain technology for that, it can be way easier first to enable this delivery versus payment you just described, right? So you basically consume a service, which can be also a micropayment for, I don't know, 10 minutes watching Netflix. And in the background, via smart contracts, automatically a payment can be triggered on chain. And for this kind of a DLT is really key, because you currently can also do this via bridge solutions, which also exist today. So basically they build a bridge between the current payment system, for example, via SEPA, but this is really inefficient because it's again a break from one system to the other. And it's also not possible to have payments with, like, in the subcent area, for example. So I think this is very essential, Lambert, what you said, and also this machine-to-machine aspect, because with a blockchain, in theory, every machine could easily be integrated in the payment system. But for the current payment system, this is quite tough to get a machine on board, right? I mean, it's actually not possible because you need an ID for that, and to open a bank account, to do KYC, and for a machine, this is quite tough. So if a regulation in the future allows that, then this is actually a really good use case for DLT here as well.
Yeah, and the fact that we will be able to give machines money has to do what CBDCs can enable, and the digital euro in turn can enable, is to move away from an account-based system of payments. Now, account-based systems require, for the most part, strong identity ties. If we move to a token-based system, then we can have a better instrument that is more similar to cash. And here is where the cash-likeness of CBDCs that we hear all the time comes into play.
Yeah, that definitely sounds great, and also like a very big change in our daily life. Another topic that I want to direct this conversation is the public acceptance. Speaking of the public using CBDCs, I think another important topic is the acceptance, which is also dependent on the offered properties of a digital currency. And in this matter, I would like to ask you, what would you say is especially important for, let's say, European citizens in case of the digital euro, for example?
Yolanda, should I start again? Okay, perfect. Yeah, so I think it's a few things, and I think that a very important one is security. So of course, you don't want to have risks on cybersecurity when you use a digital euro, that you can maybe be hacked or could basically really lose your funds. I think this is really key. And the second one for me personally is privacy. Because why I personally, I mean, I'm German, and why I really like cash is because it's private, right? So cash is a means of payment. When I pay a euro and with cash, nobody besides us two sees this. There is no database, there's no record. So it's really completely anonymous here in Germany until 10,000 euros, but this is just a side remark. It's really anonymous. And therefore, I personally also think a CBDC has to be anonymous, at least to a certain extent. So for digital payments, it's quite tough because you also have the risks of, you can do money laundering, there can be terror financing, and this is really tough in a digital world to track. So what I personally would say, a digital euro has to be private to a certain threshold. And this is actually one paper, a research project I'm currently working on, where we developed a prototype for a CBDC system that up until a specific threshold allows completely anonymous payments, kind of what we see in Zcash, so the crypto world. But when you exceed this threshold, then you have like your normal payment system, which is not anonymous. So you can use SEPA, etc. You have KYC, no worries. But citizens have basically the ability to pay anonymous. And the central bank can now choose what the threshold is, right? So this can be 100 euro, 1,000, 100,000. This is up to debate. But I think some degree of privacy is essential. And for me personally, I'm basically a little bit too pessimistic here, but I wouldn't use it if there is no privacy.
You said that you're pessimistic, and on principle, I agree with both areas that you mentioned. So what I want to do is drive home why we need privacy in payments, if you would allow me. So we've seen from the open blockchain space that systems of precise control, so what blockchains are systems of precise control of transaction state transitions. And a digital euro will be such system of precise control because it is digital. So we've seen from the blockchain space that systems of precise control, such as blockchain, when made available, lead to greater transparency and accountability. However, when those same systems of precise control are controlled and influenced by a single entity or collection of entities, they can lead to surveillance. And this is, of course, evident by what's happening in big tech in the moment. Now, for a digital euro, some might argue that total control is a good thing because we can achieve anti-money laundering and counter-terrorist financing. And that is fine as long as we all agree on who the money launderer or the terrorist is. But consider a scenario where Europe has a bad election or a collection of bad elections. And suddenly you wake up one morning only to find out that you are the terrorist because you voted for the wrong party or you did something else that the government does not approve of. Now, you might find yourself deprived of access to cash. And not only that, but they also have a complete history of everyone that you have transacted with. And this might seem like an unlikely scenario, but when we are dealing with the future of money and payments, those are the hard questions that we should consider. And my opinion on that, I share the same opinion with Jonas, is that the digital euro should take a hard stance and build privacy into a digital euro. Cash is not enough, but I'm also pessimistic about that.
Yeah, also, I think this is indeed a very important and crucial topic. And talking about this stance, is there, in the case of the digital euro, if we take this example again, a stance from the ECB about this?
Yeah. So what the ECB basically did after they report, I mean, in October, they released their report on the digital euro. So this was basically laying out what their perspective is, when a digital euro could come, how it could potentially look like. And there is also a section of privacy, but it's not really precise. So it can be all or nothing. So it's really hard to tell. But what the ECB also did, they started a consultation directly after they released the report, asking the people exactly the question you asked us, Roman, what should a digital euro have, which features? And it was like an absolute records of responded for every ECB surveys, and more than 40% of people answered privacy. So now the ECB has the topic privacy on the agenda because the ECB wants to communicate with the general public. They did it, and the general public now said we want privacy. So it's hard for the ECB to say at least, well, we will not provide it, right? So yeah, they haven't agreed on that, but I think they are kind of under pressure now.
And the solution up to this point is, well, just use cash. But that's not enough because it is a matter of bad money driving out good money, or vice versa, good money driving out bad money. Because if cash is the go-to medium for money laundering and terrorist financing, then cash will fall out of favor. We need to build privacy into a CBDC.
And also, as previously mentioned, the point about public acceptance, what I have observed online, if I take this example, where some videos of so-called self-proclaimed economics and politics experts talking about CBDCs as if it was just another tool to control the public, without even knowing that there are some efforts from the SLP side to enable anonymous payments. And now talking about education, like what would be the steps necessary to educate the public about cryptographic properties, because this is not an easy topic to grasp for people that are not like working in this area or not related to this area. Jonas?
Yeah, I think it's really educated to talk as much as possible about this topic. So this is what we do today. This is also what Lambis does with his great work in the Blockchain Observatory and Forum. We also, maybe some have seen it, launched the Digital Euro Association, which is a think tank, which is exactly meant for that, meaning educating people, because this is actually key that people understand it. Because if people don't understand what the CBDC in the end is and what it means, people will not give their feedback. And in the end, we will end up with a project or a CBDC form and nobody in the end wants, right? So I think this is something where we all can basically take our part and can do this. And I think what's also very important for the central banks is really to get all the stakeholders on the table. So, and I think this is also some point where the ECB is now really doing more. So also talking to not just to other central banks, but also to banks, to industrial players, to academics, to blockchain startups, right? Because just when you really sit together on the table, you can develop a project which everybody like kind of agrees, and you can only reach like the best solution if you discuss this with all parties involved, and not just basically one party being the central bank developing something and not asking the people. Therefore, I really like the approach that the ECB is kind of having, asking people what they want, and now of course they have to follow that. I think that's it's also quite important for the credibility.
Yeah, I have nothing to add to that. I think that every organization that could even be loosely related to CBDCs is now working on a digital euro, and this is a great thing to say. So and it's the way to go.
Yeah, and also talking about the introduction of a digital euro. Like I like this, I like this as a good example for CBDCs because I mean we are located in Europe. The introduction of a digital euro requires I assume, a great organizational effort in order to be able to roll it out to the public. What would be a good approach for such a large-scale maneuver, and in terms of distribution and management of funds? And where do you see the role of banks, for example, as an intermediary in this case? And also, like, in addition to the point with the management of funds, like we talked about how a world with CBDCs in place would look like. How can I or the listeners imagine a world with CBDCs? Like, how do we access them? Like, will it be via a mobile phone, a smart card, for example? Like, are there at least some examples that you can maybe explain to us?
Lambis, do you want to start this time?
Yeah, I think I will try. You give me the hard ones because there are so many things to unpack in this question. So I will start with how we can manage the issuance of a CBDC and what the role of commercial banks will be in that. So at the moment, the benefits of issuing a digital euro versus the overhead costs of managing its issuance are at the heart of the discussion of CBDCs. I personally think it is worth it. And now, moving on to how we can go about the issuance of a digital euro. Through research, we have realized that there are three primary ways that the European Central Bank can go about the issuance of a digital euro. And each one has different implications about the costs and management overhead, as well as some other areas, the nature of claims, but those are beyond the scope of this question. So in scenario number one, we have a direct CBDC, and this is the most simple form of CBDC to understand. There, the central bank, their users maintain accounts directly with the central bank. This means that the purpose of the central bank would have to shift from serving the financial institutions and the economy as a whole to managing end customer relationship. And as you might understand, this is very costly to do. So scenario number two is for the central bank to build an indirect CBDC where consumers hold balances with commercial banks, as they do now, and those balances are backed either fully or partially by CBDCs. And how can a transaction occur in some system? Well, as it does now with the consecutive crediting and debiting of accounts. This option is very similar to the system that we have now, and as such, it is likely that it will not offer the same benefits of a CBDC. Finally, we have a hybrid option, where consumers hold account with the central bank, but commercial banks are responsible for maintaining those accounts as well as the end customer relationship. In my opinion, this last model is the best when it comes to rolling out a digital euro. This is because it leverages the strong points of central banks as well as commercial banks and does not necessitate massive changes in the ways that our financial system works. So what do you think, Jonas?
And maybe to add from an administrative perspective, also how the ECB could now do this. I think this was also part of your question. So this is definitely a quite complicated endeavor to issue a digital euro. So what Christine Lagarde said a few years ago, that she thinks that a digital euro might come within the next 5 years. So we do not talk about tomorrow, we talk about 5 years. And I think 5 years is rather optimistic than pessimistic, to be very honest, from a central bank perspective. So from my perspective, if I now would have to advise central banks, I would say first they really should find out or should decide if they want to issue a digital euro, right? So this would be first. If they say then yes, they should really figure out what properties the digital euro should have. So basically anonymity, security, availability, usability, right? So whatever comes to mind, and this might also take, I think, 1 year at least. Afterwards, and I think this is important, just afterwards, one should really think about the technology. So first, it should really be out on the use cases and the features. And afterwards, it should be decided, should we do this on some type of a distributed ledger, or should we do this on a centralized system? I think this would be then a next decision to take. But before that, of course, partnering with companies from both ends, so centralized and decentralized infrastructures, to really test both of that. And then in the end, you kind of have a product which works. You also have to test it. We have seen it in China. China is leading here. They tested it for more than 1 year now. So even testing takes probably 1 year. And then, of course, also providing the infrastructure, so the wallets, the apps, or maybe the hardware. I mean, it can be software or hardware based. It takes some time. And in the background, all the legal frameworks have to be adjusted. So this is something which is missing quite often. Currently, also in the euro area, it would not be possible, regulatory speaking, to issue a digital euro because cash is the only legal tender now. So there also has to be in the background a legal point of view. And also you have to analyze what's the impact to the financial sector, you said, Romans. And this is also where lots of research have to be conducted. So I think it makes sense that it really takes some time, but also lots of resources should be put in CBDC. And there should also be some research with external people, of course, to analyze these effects on the financial sector, to maybe analyze anonymity. The Bank of Canada is doing this perfectly because they asked 3 universities to provide just a concrete framework, which is, I think, great to have academics involved. So this would be, from my perspective, the way to go to do this really together and to address this topic, because this could, in the end, be quite disruptive.
Can I add one small thing on top of
course.
that? And that is that much of the talent on cryptocurrencies and blockchains since 2015 has moved on to the open blockchain space, because there are just not enough incentives for someone to work at a bank or central bank. So another challenge that the central banks are facing at the moment is a huge brain drain caused by a very rapidly expanding and evolving open blockchain sector. So, and this is something that they also need to address. And as Jonas mentioned, we've seen some initiatives by the Bank of Canada to connect with universities to do so. So yeah, this was the only thing that I wanted to add.
Yeah, thank you for your response. Also taking it a step further as to what the risks of CBDCs are. Another hotly debated topic from the industry are bank runs, and I think it was mentioned throughout this webinar in the chat. How would you assess the implications of such risks, and what steps could policymakers undertake to mitigate the risk of bank runs?
Should I again start, Lambis? Yeah, okay. So I think this is one of the most important risks. So maybe besides the potential data privacy we talked about, and also like cybersecurity, I think this financial disintermediation is the most important risk. Maybe to go one step back, why could this basically happen? This is again about the claim on the central bank I described in the beginning, that in times of crisis, people in theory could shift their funds basically like from one second to the other, from their bank money to the central bank in a CBDC, and would therefore decrease their risk because it's central bank money. And this would in the end, or could put bank under immense liquidity shortages, and also kind of threaten their refinancing, so that they have to find more expensive refinancing sources. So this is maybe the background. I think the central bank has now 3 possibilities to address this. And in the end, how large this disintermediation also depends how good the digital euro is, right? So it depends on the attractiveness. If it's not that great or that big of a deal, then this might not be an issue at all, right? Because people would not just use it in the end, and also in times of crisis. But if there was this risk of a disintermediation, 3 choices. The first one is basically to introduce a cap on CBDC holdings. So this is something the ECB has also talked about, that you have a few thousand euro, a cap. I personally don't like it, because for me it should be free. It should be a competition and not restricting use. But this is just my personal opinion. The second one is introduce basically a 2-tiered interest rate. This was also a proposal by the ECB, that you basically have like a guaranteed positive, or in the worst case, 0 interest rate up to a specific threshold. Also, for example, for a few thousand euros. And afterwards, you could in theory go negative with the interest rate. And why could you do this? From a central bank perspective, to disincentivize holdings. So if you have a minus 5%, just a number by myself for CBDC holdings, if they are more than a specific amount, people would decide not to use it because, I mean, a high negative interest rate, right? This would be another way. And the third way would also be, this is heavily debated or discussed in the literature, is so-called pass-through funding, that basically when banks lose a very huge amount of deposits, they can go to the central bank and demand more funds from them via loans, basically. So they substitute this lost deposits with additional central bank funding. This is also something I researched in one of our papers. So this could also be a way to go.
And one of the techniques for that is that the central bank could potentially lend out the money that it receives as deposits for the digital euro to the commercial banks to achieve what exactly you described in your last point. Yeah. I also have something to add here. I will maybe rephrase the question a little bit. When people think of the risks of CBDCs, they usually think of monetary policy and bank runs, and this is very understandable. But I would like to stress that in reality, the risk is a spectrum. And falling in either of the two extremes is very bad. So on the one side, we have risk number 0, where the central bank changes nothing, and a digital euro is essentially a blunder. And this is a very real scenario because Europe is notoriously protective of existing systems. And on the other side, we have risk 100, where a digital euro fundamentally disrupts our financial system, disintermediates commercial banks, and falling on either one of those two extremes are equally bad. So from the one side, yes, a central bank should take some measures to ensure that we don't reach risk number 0, but they should also take great care to ensure that we move away from risk 0, which is that private deployments, foreign CBDCs will take over because the digital euro will just not be enough. And this also speaks to the unattractiveness that Jonas Gross mentioned in his response.
All right, thank you guys. Looking at the time, I have one last question for you before we go into the live Q&A with the audience. How conceivable would be the idea that current blockchain projects, public blockchain projects, as like Ethereum with its DeFi, decentralized exchanges, smart contracts, etc., could be made interoperable with CBDCs? Does this sound lunatic? Is it possible at all? And if not, what would be the reasons?
Well, I think this is a really good question. And this also comes back to the aspect Lambis brought up in the beginning, that it's really great to have DLT-based euro payments for specific use cases, right? For specific reasons. And from my perspective, this DLT perspective can also be provided by the public sector. So it doesn't have to be a CBDC that is based on DLT. For me personally, it could also, for example, be a commercial bank or an e-money institute that issues some form of money on a DLT, and this can be used for machine-to-machine payments. So for me, you don't need a CBDC for that. But it would be great to have this, of course, being interoperable with a CBDC, right? Because then you also increase your efficiency there. So I think this is quite good to have this for the private sector. I'm currently a little bit skeptical about stablecoins, mainly because the current counterparty risks, because stablecoin providers are not yet regulated in Europe. I mean, we all know that there is MiCA going on. So in a few years, they will be regulated and might actually also be regulated in a similar way than e-money. Therefore, central stablecoin provider have to guarantee that funds are fully backed 100%, right? And I think if this is the case and people trust that, then there is really a huge use case also for stablecoins without a lot of counterparty risks, to also enable these innovative business models we discussed, or Lambis mentioned in the beginning about IoT, machine-to-machines payments, delivery versus payment, you name it.
Yeah, the way I see interoperability, interoperability is a solution that allows two separate systems to communicate and know the state of each other at any given time. There's nothing more to that. The more similar the two systems are, the less information that needs to be exchanged between those two systems, and thus you can have more efficient, faster and cheaper interoperability between those two. But even now, where the euro, the regular euro or the regular dollar has nothing in common with cryptocurrencies, we still have stable coins that try to achieve this interoperability in the decentralized finance space, and of course with severe drawbacks that Jonas Gross described. Those pertain to credit risk. We have to trust that Tether or some other provider has deposits indeed, and that they don't disappear one day and suddenly people lose money. So I would say that interoperability is happening and will happen whether we plan for it or not. But if we design for it, then we can ensure that it happens in a safe and compliant manner. And if we move to a DLT infrastructure, there is also a lot of developments that are happening in the decentralized space that the digital euro can bootstrap upon. So for example, cross-chain atomic swaps, sidechain pegging, anchoring, protocols like Polkadot and Cosmos, and this can be complementary to the solution that Jonas provided, suggested of a commercial bank being responsible for the interoperability of payments. Yeah, so that's all from my side.
All right, so we have about 18 minutes left, so I'm going to turn it over to some of the questions from the audience. I've got a couple of that have come in. Let me check. All right, so we have one question asked by Mark Wigmans and Nishat Kala. How will CBDC influence the business model of banks? Will retail banks start to move more into crypto asset services or financial products in order to stay salient?
Can I start with that? I don't think that CBDCs will be the single factor that will influence the business model of banks, but rather what is happening in the open blockchain space. If you're following the news, you see what is happening with PayPal and Bitcoin, with businesses such as Tesla that are starting to accept money, and most recently, I think even Time magazine. So I don't think that, because we are talking about traditional institutions here, which are usually late to the party. What will necessitate a change of course for traditional businesses and perhaps even banks is not CBDCs. CBDCs will just be the nail in the coffin. It is what is happening in the open blockchain space at the moment. If you look in Switzerland, there are already regulated banks that can deal in cryptocurrencies, and there has been a huge push lately to open this up to other actors as well, and in other countries too. So yeah, CBDCs will just be the nail in the coffin. The factors that necessitate this change in business plan is what is happening in the open blockchain space: Bitcoin, Ethereum, DeFi, NFTs, and the likes.
All right, Jonas, you want to add? Or?
Yeah, I can add one sentence. So I actually agree with Lambis that all this debate should also be kind of distinguished. So I think there are completely different use cases for crypto than for CBDC, to be very honest. And I think banks will be included. So Lambis explained these different CBDC systems, so being direct, indirect, or hybrid. And I think also what central banks currently communicated will be a way where banks will be still important, and where they will kind of distribute the CBDC as we have, for example, for cash today, right? And that also banks will be on board when it comes to KYC measures, checking for AML, CFT, counter-terrorist financing. I think banks will be included for that, so it will not completely disrupt the banking sector. They might be involved, but of course, a severe disintermediation kind of changes the system on the financial system, and maybe then also to the question, it would then of course also make sense for banks to look for additional business models, for example, when it comes to crypto custody as well.
All right, thank you. I'll continue with the next question asked by Nikolai Pedersen. In regard of Jonas mentioning a retail CBDC, how about using CBDC for interbank cross-border settlements, wholesale, as well as maybe tokenization of syndicated loans where they are paid with a CBDC?
Yeah, I think wholesale CBDCs is a topic we didn't talk about today, because this is, as the term says, not a retail focus, but just basically wholesale. So this, for people not aware, is basically a form of, here it is about technology, so a form of distributed ledger-based central bank money, which is only available for specific market participants, for example, banks. And I think this is interesting because here, these use cases we explained in the beginning about delivery versus payment can be realized. So meaning you could, for example, have central bank money to settle settle, for example, stocks, for example, or bonds via banks in central bank money, via smart contracts, via a blockchain. I think this is truly remarkable. Lots of central banks researched that. The BIS recently kind of released a video and a report on their project Helvetia, if somebody wants to read it. So I think it's very, very interesting, but this is completely different use cases than this retail CBDCs or this digital form of euro we might think and we have talked about mainly today.
All right, thank you. I'll pick up another two questions and maybe I will combine them. They're kind of referring to the last question I've asked you about open source innovation. Like the first question by Nishat Kala, is open source innovation the enemy of centralized finance? And the second question also by Mark Imhoff, if we are talking about using CBDC for machine-to-machine payments, Internet of Things transactions, do you think central banks have a chance in competing in this space, since public blockchain projects like IOTA are already developing this technology since many years?
Do you want to start with that? I don't remember the first question.
Oh yeah, the first question is open source innovation the enemy of centralized finance?
Okay, you can start, Jonas, if you want.
Yes, I can. So this is really hard to say. So of course, central banks want to rely on kind of the technology they use, their practices, and not something which is open source available. They also want something where they can manage the system, right? So of course, this will be not a decentralized Bitcoin kind of system, but it will be a system where money can just be created by the central bank. And this is very often then not really the case and possible with these open source projects. However, there's also one project I would like to mention, which has been released in a working paper by Thomas Moser and also David Chaum, some people might know from the crypto community, because they proposed a concrete CBDC framework, how one central bank could introduce this. And this is completely based on open source. So the GNU Taler, maybe some of you know this project. So this shows it doesn't have to be that central banks use something which is not open source, but my personal guess today would be that in the end, it will be nothing, not a protocol which is currently available open source.
Yeah. On top of that, if we take the European Central Bank more specifically to their word, one of the things that I mentioned in the report on the digital euro is that they want the digital euro to serve as a platform to incorporate innovations from the private and open blockchain sector, not rely on them for a plethora of reasons, but help facilitate those initiatives. So yeah, they're not entirely enemies, competitors a little bit, but I don't predict a world where one exists without the other, at least not in the near future.
All right, let me have a look at some of the other questions. One question, which organizations are currently occupied with preparing CBDC regulation, and how mature is their work at the moment?
So just about regulation, right? Or about CBDC in general? No, just
CBDC regulation, like
okay.
What's the stance on it?
Okay, yeah, maybe Lambis, I start again. So there is one paper by the IMF, which was quite interesting because they asked in the IMF, they looked how many central banks in the world are currently allowed to issue a CBDC. And as I said already in the beginning, it's really not a lot. So I think it was, I'm not sure, 20 or 30%, maybe I'm mistaken, but it's definitely not every central bank. So I think every jurisdiction now has to work on their legal framework if they want to introduce a CBDC here. I think for the euro area, it's a little bit too early because the design really kind of drives the regulatory question. So Lambis said that the difference between an account and a token, this is very, very important for the regulation. So it's currently hard to really regulate something which is not even exist there on the concept, right? So I personally think there is not that much going on when you look at Europe. But when you, for example, look to our neighbors here in Sweden, they introduced the idea of issuing a CBDC in 2017, the e-krona, and they currently basically check what has to be done in legal terms to allow this. So there are definitely for central banks, China, of course, doing as well, because they might launch their DCEP maybe already next year. But for the euro area, I think there are currently more important priorities, but still legal questions have to be addressed, and they will. But I personally would just say maybe not starting this year, but maybe next or the year after, when we know how the digital euro could look like.
Yeah, and another factor that speaks to how challenging the issuance of a digital version of sovereign money is the fact that not only Sweden, but also Estonia tried to issue a form of CBDC back in the day, which was very hastily shut down by the European Central Bank. And I know that Austria has not a CBDC, but rather a culture token that serves as social credit. And this is also something that has generated a lot of heat from European regulators. So anything that comes close to a bank issuing some form of separate money, and of course we had our discussions in Greece back in 2015 about the parallel payment system. Anything that comes close is immediately shut down because it is a complex matter that will need a lot of entities coming together. And at the end of the day, we should not forget that Europe is not one unified continent, as much as we like to think about it. It is 27 separate countries. Yeah, so I expect this to be very challenging.
Yeah, most definitely. I agree. Also looking at the time, we have 8 minutes left. Another question asked by Moritz Reiser. What should we, give me a second. What should we focus on in the development of CBDCs to be open for future possibilities of use, like smart contracts and so on? How to prevent it being fixed on a certain model that prohibits further developments in other areas?
This is a very good question. There's one thing that I want to mention here, which is coming up with an optimal solution immediately will be very hard to do. Okay, and going through the entire universe of possibilities for a digital euro before starting with a pilot or with a live initiative is also impossible. So what is important is to make a start, have a pilot deployment, see how it goes, examine different options. And I do not predict a future where we have one single digital euro that is issued, at least when it comes to the early stages of pilot deployments. I expect the European Central Bank to test different approaches with different implications for the system and different features. So the important thing to do here is to not plan for 20 years ahead, because 5 years ago, Ethereum did not exist, but rather to get to work, issue some preliminary versions of CBDCs, and be quick to incorporate features when we see that those are important in the existing system. Making a system that is flexible, making a system that is interoperable, and making a system that is programmable is very crucial if you want to future-proof something. But you cannot account for the entire universe of possibilities before the fact. The development of such project would never end.
That's actually great aspects you bring here, Lambert. So I fully agree. And maybe one point to add, I personally wouldn't have an issue that the ECB provides some kind of basic CBDC, which in the end is also not based on DLT, but it's kind of anonymous, as I explained, at least to a certain threshold. And then we have a really high interoperability to other, let's say, DLT-based euros, right? So this is something I explained in the beginning about digital euro tokenized e-money, tokenized commercial bank money. So some private sector forms of money based on DLT. So I think you don't need the central bank for that. And I think I'm not sure if the ECB really has the best expertise to do this private sector task, because private sector is way more innovative. We've seen this in the CBDC, and not in the CBDC, in the DLT space for forever. So why not providing a basic CBDC, which is not based on DLT, but interoperable with lots of other different forms of euros which are based on DLT and enable us all these great use cases we just discussed in the beginning, machine-to-machine payments, IoT payments, and you name it. So I think the private sector can here basically the real hope for innovation, because it has shown us that the private sector is very innovative and probably will also continue this innovation or innovatory power also in the future.
All right, thank you. Maybe also it's now the last question, as we have 4 minutes left, asked by Ludovic Mark Coutinho. Where do you see the retail banks in 5 years from now? What do CBDCs have over the current fiat system?
So if I start again, Lambis, so that's a good one. I actually think in 5 years, not a lot has changed, because CBDC might not yet there be, so it might still take maybe 1 year still to go. But if a CBDC is live, then I think there is definitely this digital form of central bank money. It heavily depends, as we discussed, on is there a cap, is there a negative interest rate, on how severely this impacts banks. But I mean, banks, they can lobby to get basically the product they want, but they cannot really influence it directly. So I would say that banks will be involved somehow. It can be ensured that banks, the disintermediation will not be too hard, but this is like the preference of the central bank, how they want to design it. But I think commercial banks should really look into these additional new business models they now kind of have. So today we talked a lot about DLT-based payments. They have so many different and great use cases for IoT, machine-to-machine economy. So if now banks engage into new business models, for example, related to pay-per-use models, and provide services there, this will be nothing the central bank will do in the end. They don't want that. So this is something where banks can position themselves, could also issue their own digital euro on the blockchain. Basically, I also explained this, and could then also kind of be the gateway to the crypto ecosystem via crypto custody. And I think if banks kind of follow these 3 different solutions, possibilities, then the future wouldn't look too bad, at least from my perspective.
Yeah.
And Lambis, you want to add?
From my side, I think that this is the high note that we need to end this discussion on.
All right. I'm looking at the time now. We have 2 minutes left. I think that will be it for today. If some of you guys still have open questions, I'm sure Jonas and Lambis will be ready to answer your questions via email, maybe. Yeah, absolutely wonderful to hear.
I will put my Twitter handle in the chat right now, and you can send any questions there.
All right.
Yeah, the same for me. You can contact me on Twitter or LinkedIn. And yeah, Roman, again, thank you for you guys to have me that spontaneously into the panel. So it was really a pleasure also to discuss with you, Lambis. And I think from my perspective, really one of the best questions in the panel on these topics, because I think we really talked about kind of everything in this hour. So really thanks, and very high quality. And yeah, it was really a pleasure being here.
Yeah, likewise, it was a pleasure being here.
Yeah, so Jonas, Lambis, thank you very much for your time and joining us in this conversation. I certainly got a lot out of it, and I'm sure our listeners did as well. We'll be making this video available online for you guys, probably at some point tomorrow on YouTube. And yeah, thanks again, everybody, for tuning in, and have a wonderful evening.
Thank you for the great moderation. Have a good one.
Thank you very much.
Thank you, everyone.
Bye-bye.